All right, we made it through our first panel, and that was extremely interesting. Even more interesting to see how many people thought we were in the bull run and not. So that was also exciting. Do we have our speakers still here? For those of us that want to have questions for our speakers, if you can take those conversations into the hallway, that would be great. All right. So welcome to panel 2, day 2 at Proof of Talk. Is this everyone's first day at Proof of Talk? Or show of hands, first day? All right, okay, so the majority of you are returning. That's a good sign. And you came back to the polka dot stage. All right, I appreciate that. Well, we're going to have another really great conversation. We have global hotspots, choosing the right home for your startup. And I'm going to first introduce Kelsey McGuire of Shardeum to the stage. Please join us on stage. Take that seat there. Absolutely. And following Kelsey, we have Ivan de Lastours from Bpifrance. Neil Cunha-Gomes, is it Games? Gomes, Neil Gomes. Please come to the stage from Softbank Vision Fund. And Vardan, welcome to the stage. And Vardan is with Fastex. And Vardan, how do you pronounce your last name?
Khachatryan.
Okay. I'm glad I had you say it. All right. Have fun, guys. Oh, here you go. Round of applause, please.
Yeah. Hi, everyone. I'm Kelsey McGuire, the CGO at Shardeum, which is a auto-scaling L1. And today we're talking about location, location, location. Just like the real estate people in New York City always are focused on, it's really important for your startup project as well. And I'm really excited to have everyone introduce themselves today, starting with Ivan. So if you could please give a brief introduction and let us know where you're based personally and where your project is based or your company.
Thank you. And thanks to all the people here. I think the real alpha is here in this room right now. We're Bpifrance. I represent Bpifrance, which is Paris-based. And we are a mix of a development bank and a sovereign wealth fund. So we manage 100 billions. And the idea is to promote France for entrepreneurs everywhere in the world. And this is great because this is a great opportunity, but we don't want to be too French. I mean, we want to be welcoming. And if someone finds another place to do a company, we also really try to play the game and say that's a great opportunity, and we're here to help you, which is kind of the case in crypto, because if you think you're in decentralized world, so the local approach is kind of not that important at the end.
Hi everyone, my name is Neil Cunha-Gomes. I'm at Softbank Vision Fund based in London. Our fund is globally headquartered in London, but we have 15 offices around the world, so we're actually quite global. We've got about 500 portfolio companies to date. 2 billion out of 160 billion was invested in crypto Web3 businesses, so it's about 1% of our fund in this space, but a lot of those businesses are also very global. I have 2 portfolio companies, particularly in this space. One's actually in London, 5 minutes from my house, so to speak, keep close tabs on them. But the other one's actually decentralized, global. People think of it as US-based, it's consensus.
Hi everyone, my name is Vardan Khachatryan. Based in Dubai, UAE, Fastex is a Web3 ecosystem, a spin-off of a large iGaming company, probably one of the biggest in its space. And the company Fastex is operating globally except for various jurisdictions for various reasons. We have crypto exchange, metaverse, NFT marketplace, almost everything that generally you can have in Web3, including a lot of decentralized protocols, our own layer 1 blockchain, etc. Thank you.
Great, and I'm based in New York City and the Bay Area, and most of my team is in India, so some interesting time differences with some of our conversations. But kind of moving on, we know that tax incentives and funding opportunities are extremely important, but what other factors come into play when you think about where a startup should kind of have their headquarters or most of their team?
So for France, we would say that tax incentives is not really the motive. But beside that, and when you can explain things, you say it's cultural, but I would put culture first. You need to set up a company in a place you feel well, you feel connection, you feel connected to the city, to the communities, and that can be anywhere. And especially for European people, you have to dare going abroad. It's the greatest opportunity. And for this, I would really encourage entrepreneurs to connect to other ecosystems and not doing the safe choice.
I'd actually completely echo that. I think team and culture are the most important thing. I think where you're selling your product matters a little bit less in this world. It's entirely digital and completely online. And so you can sort of base yourself anywhere in the world and still have access to the same people because, like all of us here, many people travel everywhere in the world anyway to meet at conferences where you need to make those connections, but actually 90% of your time, in most cases, hopefully, should be spent on your own business, working on product development, working with your teams to really make whatever you're working on a success. And so we have no preset notion as to where you should be based. I think in Web 2, expanding internationally has historically been quite a challenge. I think moving across borders and actually trying to relocate people, hire teams in different parts of the world, that seems to be so much more easily done in this category, and we've seen our companies do quite well at that.
Well, since we are expanding quite rapidly and we have a lot of different products which are triggering a lot of different issues, we consider many different factors, including regulatory issues. We consider the approach of the country towards blockchain technologies. We consider the community that exists. So the more crypto adoption, it makes more sense for us to get into this market. And other than that, also the talent is important. So although at the moment, life is in a way that you can hire remotely, and a lot of Web3 startups are working with a lot of remote stuff, but it's important to have also on the ground a lot of team. And it's not just developers, but also a lot of good accountants, lawyers who actually understand the technology and actually can help the startup to navigate this, in a way, complicated also environment.
Yeah, and I heard you mention regulation as well. And of course, that factors in a really big way. Being based in the US, we are often very stressed out about the regulatory environment. And as a result, I've seen a lot of founders and projects start to move to Europe and other regions as well. So from what you all have seen, how have those sort of government policies shaped the distribution of teams and projects in Web3?
Very good question, thank you. First, I would split the issuance company of the token and the operating company. The good news is that you can have an operating company everywhere in the world. Basically, it's the tech and the marketing teams. And so you have the choice for this. For the issuance of the token, this can be more tricky because you have choice, and you're an entrepreneur, so you want to have the best chance for your company. So you can choose the offshore setup, which has some good things, but also some downsides. You can choose a local approach. You can choose a European approach, but Europe is large. You have Switzerland that offers some possibilities. They did a great job with foundations. They are working with associations, which is a kind of a less heavy setup. And for Europe, and in 2025, which is tomorrow, you will have the MiCA ruling, so market in crypto assets, which doesn't cover everything, so that's the trick. We have a ruling, so that's a plus. We don't have all the answers. Staking is a big question. DeFi exemptions for algorithmic stablecoins is a big question mark still. But we have something which is great because you can speak with anybody. And internally, if I speak with my compliance department, I help Mika say a UTE token is this, and it's written. So it's great to have a discussion with all the banks and stuff. But still, everybody needs more regulatory clarity on this, and there are other ecosystems, and we are not here to blame them in a way. We just want the entrepreneurs to have the best chances of success, and if it's Switzerland, then it's Switzerland. He can always do an operating company in France and would be happy, but like he has the choice, and that's great.
Yeah, and Ivan, just to build on that really quickly, do you see more regulatory clarity coming out of European regulators than what you've seen in the US overall?
US is tricky because there are new elections in November. I mean, it's difficult for a European guy to comment US politics, but let's say that maybe Trump will be pro-crypto, but as Trump has different views, he could also change his views. So we don't know. What we know is that Biden vetoed a bill, and that was a real disappointment. But there is an evolution. We're not, it's not Elizabeth Warren statement. So there is hope. And of course, if US sends strong signals, then everybody will try to comply even more. But for the moment, it's a tricky game.
Yeah, I'm still optimistic that Biden will see the light in this whole industry, and so we don't have to go down a very dark path. So next up, yeah, Neil, what do you think about government policies and how they play into startup locations?
Yeah, look, I think really interesting few points there. Let me just build on a couple of things from my perspective. So two real points I want to make here. One is, where have early stage ecosystems started to build themselves in this, geographically in this category? And the second is really just on the topic of increasing regulatory clarity. So in the first point, I think one of the most exciting things when I looked at this category versus software, which is probably the closest comparable in Web 2 that my fund would typically look at and has invested a lot of money into. A lot of software businesses in Europe were limited in many cases by the size of the local economies in different countries in Europe, and in many cases then, after proving out initial product market fit, they'd then move across to the US. Large, homogeneous market, relatively homogeneous regulatory landscape, very supportive ecosystem, but it's just a large market with one language to sell into. And I think that didn't really happen as much in Web3, of course, because, as you said, Kelsey, the regulatory landscape was a little bit less clear there than in the rest of the world, and a little bit more strict in some regards, which kept a lot of people in their local markets. I mean, the folks at Multiverse X here, for example, have a phenomenal setup in Sibiu, Romania. They're basically the second unicorn in that country after UiPath, I believe. And that would have been less possible, and has been less possible historically in software in Europe compared to Web3 in Europe. So I think that's been great for ecosystems to grow locally and regionally all around the world, not just in Europe. On the second point of regulatory clarity, actually, I see Yuli here in the audience. We have one of our portfolio companies, Elliptic, phenomenal portfolio company. And we've invested for a couple of years, more than a couple of years at this point. And what's been great to see through their lens is actually who they're selling into. And so they sell into financial institutions and regulators around the world. And increasing regulatory clarity is something that we've absolutely seen in the last couple of years. I'm not just talking about the recent SEC approvals of ETFs and the like, but actually much beyond that, you're starting to see real institutions start to be very intrigued initially, build out product, and they're working with a variety of service providers, including compliance players like Elliptic, to really build out that capability and make it quote unquote safer, but more trusted for the larger population to get involved. And I think that regulatory clarity that increased in different parts around the world at different points in time has now also somewhat been seen in the US. And with the US getting more comfortable, again, it's a bit of a self-reinforcing cycle. The rest of the world gets more and more comfortable. And I think that's only a positive tailwind for us in this ecosystem.
Yeah, that's great. I love a very positive take there. And Vardan, what's your take on the regulatory environment?
So regulatory environment, as I mentioned, it's extremely important for Web3 startups to succeed, develop, and the more uncertainty, the less likelihood of them to be successful. And generally, United States is the jurisdiction where most of the successful startups are coming out, especially Silicon Valley. But as you can see, that's not the case for Web3, probably because most of the successful companies in Web3 are not necessarily US-based. Some are, but they're facing a lot of challenges there. And US's approach is more like regulation by enforcement rather than giving clear guidance. And one of the reasons that until now we haven't got into US market is also the uncertainty. And a lot of companies that are not operating in the US, although it's the biggest market, right? I mean, everybody would like to have some share from that, is regulatory uncertainty. So, and on the other hand, Europe probably is the front runner in terms of regulatory clarity. So as mentioned, from next year, MiCA will be in force. A lot of companies like us are already working on obtaining MiCA licenses, so it will be, automatically transferred to the under MiCA regime, so we can operate with the passporting rights, which gives us a lot of opportunities to expand globally, expand in all the European countries as well. And on the other hand, some other countries in Asia as well are more, prosperous and more considered towards Web3 regulations, such as Hong Kong or Dubai, Singapore, and hopefully this will come into other jurisdictions as well, especially in the US, which is an important market. But you can see in most of the jurisdictions, there is going to be some regulations. It's not a secret, it's with the force of FATF as well, because of, if it's unregulated in a lot of places, it's being abused, and it creates a lot of AML issues and stuff. So you can see even like countries that you have never heard of the name of, they already have at least passed laws or drafts that will be enforced yet. But US, there is nothing yet. Hopefully with the new elections or, I don't know, some kind of political changes or I don't know what, there will be some, new regulations in place.
Yeah, and despite that lack of really clear regulation in the US, we still have some amazing hotspots like New York City for Web3. I think in my old neighborhood there was a building where they had painted NFTs all over it. I mean, that's an extreme example. And then of course, I'm biased because I spend part of my time in Palo Alto, Silicon Valley, but that continues to be such an established hub for tech and innovation. But I'd love to hear from you all, what are some of the hotspots that are new kind of global spots that you feel like there's a lot of new tech, AI, Web3 activity happening?
If we take the Web3 lens, so US is the biggest market. We expect Hong Kong to follow. If you watch closely, there is a huge activity in Web3 in China. It's not official, but there are a lot of projects because for a Chinese entrepreneur, a Web3 project is less risky than a Web2 project with all the Alibaba stuff and Jack Ma.
Oh, that's interesting.
So they're really building aggressively, and they might go to the market through Hong Kong. So we expect US to go first, then Hong Kong will follow. And there's really a strong presence in Asia. If you go in South Korea, Japan, Vietnam, there's really strong crypto communities. Europe is dynamic. I mean, UK is the biggest market. Then you have France and Germany. They are quite equal. And then you have local ecosystems like Lisbon, which is really active. They just changed the law about tax incentive, so I hope people will stay. But Portugal is a great country, so they should stay. And then you have some local dynamics with MiCA that we expect. Poland is very, very keen to get some crypto asset service providers. Baltic countries, Italy, Spain has been moving. And that's great because that's create competitivity. If I would be very happy if you have new local hubs about crypto. And this is where it's different from AI and all this stuff. If someone goes to a country and say, I'm passionate about crypto, can I meet the local community? Everybody will connect him. Everybody would make efforts to say, go to this meetup. And that's what is really special to this industry. If I go to somewhere and say I want to work in finance, everybody would say, go to Wall Street, and leave me alone.
Good luck.
And I think that's the edge. And that's why we expect new places. And I hope there will be new places and that this market doesn't consolidate too fast and everybody say, oh, you're in crypto, go to Dubai, go to Seoul, or go somewhere else.
I think there are hopefully quite a few new places coming up and all around the world. And one great example that just sort of struck me last October, I was in Istanbul in October for a conference for Cosmoverse, and really fascinating. So I'm based in London. I use Heathrow all the time, and HSBC sponsors the jetway between the airport and the planes. And if you go to Zurich, it's UBS. Do you guys know what it is in Istanbul? I don't know if any of you guys, hands up if you've been through Turkey in the last 12 months. BTC Turk. A couple of people, right? It's incredible, right? You don't have a bank or local bank sponsoring this. It's got something with BTC in it, right? So then you walk down the streets and so on, and you see much more retail, well, crypto at retail level, storefronts and so on and so forth. And it's a similar story across Latin America. Basically, I don't want to generalize or draw any correlations, but places with higher inflation have historically seen a lot more adoption, and particularly for stable coins, and people talk about that as a big use case now. I wouldn't be surprised if you look at Egypt and a few other similar geographies in a short period of time. Regulations are one thing, of course, but where people are using this, where people are finding utility for this ecosystem is another. And I think that's really where a lot of the hotspots come up, because people start using it. Smart people exist all over the world. They get together and hopefully they create something interesting and new. The flip side of this is, as an investor, I'm a very late stage investor. Our check size is usually $50 to $150 million per company, and so we wouldn't necessarily be scouring the market for early stage startups. We're also not, set up to do that. On the late stage side, on the institutional side, we really see that, hotspot, the new hotspots come up by looking at, where the regulators are starting to regulate a little bit more, and really regulators are just there to look out for all of us as individuals, right? I think they're not, bad entities for any reason. It's basically, we've all agreed to have something like this to help govern our society up to today. So from that perspective, again, using Elliptic as a good example, we're definitely seeing a lot more activity come out of a few new hubs. Hong Kong is one of them, Singapore, the Middle East, Dubai, a lot of new regulators actually set up, new regulatory entities set up to help understand what's going on, give out the appropriate licenses, and make sure things happen in an orderly fashion. And so we're definitely seeing a lot of very exciting new hubs that we wouldn't have spent much time in as a Web2 VC growth equity fund.
Yeah, and Neil, do you feel like you all favor or look at certain hubs more favorably when you're evaluating a potential portfolio company, or does that not heavily come into play, more about the project itself?
Yeah, I can't say that we do. We have people, like, as I said, in 15 offices around the world. We've got a couple offices in the Middle East, in India. We have a couple in China, actually, Shanghai and Hong Kong, US, Europe. We're pretty well covered all over the world. We have really no preset allocations even within our fund as to where we invest our capital. It's one fund, one investment committee. We're pretty open-minded as to where it works, and as long as the company is operating in the relevant regions or following the right rules, we're comfortable.
Yeah, I'm sure that's encouraging to people in some of these emerging hubs, that they won't be looked over just because of location.
Absolutely.
But Vardan, how do you see some of these new locations kind of coming into greater Web3 prominence?
I think now there is some kind of competition between some of the jurisdictions to become the center to attract the most Web3 companies, such as, for example, Dubai. But unfortunately, I don't think that any of those are, perfect locations, because of some of the things that are always missing. For example, in Dubai, there is a clear regulations, but there is no banking arrangements. For example, there is only one bank that serves crypto companies. That's a huge bummer. And companies it's not easy to operate, in the Web3 environment. I mean, depends. If you are fully decentralized, it's a different thing. But then there is no regulation on fully decentralized things as well. But when you're centralized, you need, banking arrangements, fiat gateways, and there is this issue. On the other hand, for example, Hong Kong has requirements that are so expensive that for many startups, it will not make reasonable sense. And they can't invest that much money from the get-go just for the licensing, And Europe, I think, probably is comparatively the best at the moment, but Europe has its own issues. There are some requirements that are not certain and not, reasonable for Web3. For example, travel rule requirements, because Web3, the whole idea is to have decentralized, applications and then decentralized transactions as well, right? And when we are putting the travel rule requirement, that creates, it doesn't make sense at all. And you just try to kind of break the whole idea of Web3. So overall, unfortunately, at the moment, there is no perfect location that I would say, this jurisdiction is winning now. But some are trying, which is good. So at least after so many years, after 14 years of crypto existence, some are, trying to compete in this space.
Yeah, and of course, you need those hotspot hubs for communities, but that level of decentralization is also really positive when it comes to the overall industry. But when you think about your global strategies, how much does your location or your project's location impact that? For example, at Shardeum, a lot of our team is based in India, so we have a very meetup, in-person heavy culture and strategy around that to sort of start winning over that market, and we've seen some great results from that. But what are you all seeing in the space when it comes to location and strategy?
And this is a very good question. Depends on the personality of the team. I mean, some funder, and I get them, want people to go to the office, and some people don't want people to go to the office. The good news is that before, if you were from the second part, it was difficult. Everybody was pushing you to get a big office, to do all ends, to do parties. And you can be fully decentralized. And a good example I have is that some protocols, they told us we didn't hire people. We just waited from some GitHub pull request. And if they were good, we were just sending them an email saying, do you want to work for us? And I think that's great because this didn't exist before. And then you have the traditional way that will work because most people need social connections, and that's great too. And I think you should adapt to both opportunities and see what's the best for your company and what's the best for your product. The good news, again, for entrepreneurs, it means more possibilities and more road to success.
My companies are actually completely mixed on this topic. So I have maybe 15, 16 companies, two in Web3, and some are completely remote, all over the world. They'll take WeWork and equivalent office space as and when they need it in certain geographies, but also just for meetings. And they'll find time to catch up at conferences and do side events just for their own teams and so on and so forth. And others that have offices, and again, not everybody needs to be in the office all the time. I fully understand that some development work, for example, is perhaps best done wherever you're most comfortable. I'm at the other end of that scale, I must say. I'm personally in the office 5 days a week. I get in at 8. I like it. I think there's a very human element to working together. I think the most human element is in shared success. It doesn't matter what part of the team, which part of the organization in a given office succeeded in doing something, but everyone can share in that accomplishment together. And I do find that the one data point that this really does play out in is retention. And so I'm very curious if anyone has stats on this. I've seen high-level stats, and I haven't seen a complete data set around longevity of employees staying in these businesses. And at least across the Web2 data set, I've had much stronger employee retention data, higher eNPS data scores from businesses that actually met more regularly in person post-pandemic. And so I think that's a huge component, a human bond between people who work together on a relatively frequent basis. That's a huge, huge element for me. as to how I think about businesses retaining and promoting internal talent. To each their own. We're agnostic as to how businesses want to operate, but I think particularly in this space, it's great that people meet up so frequently and frankly in such exotic locations all over the world, especially at conferences like this, but even otherwise.
Yeah, absolutely. I think it'll be really great to hopefully down the line someone, or maybe we'll look into that, do some sort of research report on retention and when it comes to Web3 projects figuring out their culture and having these hubs. Do you have something?
Yes, there is an option in between.
A middle ground?
Yeah, for Web3 teams, and I think it's a great idea. The team is fully remote, but they gather 2 weeks for every big event, for every big crypto event. So that's, I completely agree. That creates the spirit of sharing something, sharing the successes, and you can have your kind of remote life, very geeky. And I found this was a good balance between the two worlds.
That's completely fair. I'd only ask, what is your definition of a big crypto event? I feel like there could be something everywhere in the world, every week of the year, but yeah.
Yeah, that's my favorite balance. At least usually we were doing, especially at Consensus, even though there was an office, it was generally around some of these larger, maybe 3 or so events a year at that time, where you see your whole team, spend a little time doing some sort of internal community building, and then kind of disperse again. But Vardan, how do you feel about that?
So I think that generally, like most of the successful Web3 companies have a huge, remote workers group of them, and it's understandable because you operate in many countries. You don't operate in one country, and you can't have offices everywhere. So, but you have to have, for example, compliance in place and stuff. So you need to have these people hired there, and you end up having a lot of remote workers. We also have a lot of remote workers, especially in the development side and the compliance side. And I think it's important. It's on the other. I would agree that it's better always to have a lot of on-site employees because working together physically is always better. But on the other hand, it's also great to have like remote employees who are from different cultures, from different spaces that can come together also at some point. And we also have a program that I think like 2-3 times per year they can come to the main office, meet the staff, and that's also during the our huge events, all of them are invited. So this also creates some kind of the gap is we are trying to close the gap between people who are working remotely and who are working on site. So yeah.
Yeah, kind of all about finding the right balance for your people and sort of the project culture too. And kind of for our last question, what is something, looking ahead over the next year, what is something you feel Web3 projects should focus on? For me, it's kind of shifting from just talking about the tech, what it is, and like those lists of features, which are exciting for a subset of the population, and having broader conversations around what it actually does, as well as focusing in on diversity and inclusion a little bit more, which I'm seeing somewhat of a positive shift in the industry. But in your take, what do you want people to be looking at over the next year and doing?
Yeah, it wouldn't be very original, but I think user onboarding is key. So there's good development around account abstraction, which is basically you sign with your phone and you have a wallet.
A lot easier.
Exactly. And we're very enthusiastic about this. The thing is that we don't know where it will come from. Would it be from a popular Web3 game? Would it be from a great layer upon Farcaster? Because Farcaster is an open layer. Everybody can build on it. So it can even be a corporate that would do a fidelity program on Farcaster. So I don't know where it will come from, but it has to come from somewhere, so everybody can be convinced that blockchain is something else than just Bitcoin and meme coins, even if I like it, and that there's a real usage, and finally everybody can say, oh, that's it, that's blockchain.
I'll take a slightly different lens on this, which is I spend most of my time with mid to late stage growth companies. And I think one of the big question marks they're working through at the moment, or have been, let's say, for the last couple of years in particular, is right to win. And I think right to win in conjunction with unit economics are the two key topics that keep coming up recurringly. And I think the key there is that we really need to understand why our customers, whether they're businesses or end consumers, pay us. What do they actually like about what services we're offering them? And the unit economics half of the equation is basically, are we charging them the right amount of money to cover our costs to do that? And I think a lot of that was less sustainable a few years ago, is increasingly sustainable now. And I think focusing on right to win really helps people sort of differentiate themselves across the competitor set. And there are so many businesses and protocols in this space these days, and this applies a bit earlier stage too, that do almost the same thing with a minor tweak. And is it a feature, is it a functionality, or is it a real business model? It's something that can be scaled into something that maybe SoftBank one day invests in. And I think that's something that's quite key for me.
So I think that an important thing is to focus on things that will bring more adoption, because not for every person it's easy to understand how technology works and get into these seed phrases, addresses. There is a lot of people are losing a lot of funds just because of the complexity of blockchain. Of course, over these 14 years, new technologies emerged and made everything easier. With 1 or 2 clicks now, you can do a lot of transactions, very different transactions on blockchain. But I think making it easier and also working on the fiat part as well, because we can't, lie to ourselves. Fiat is important. Especially all the Web3 enthusiasts are, especially those that are, in the more extreme side, they think that they can, claim that we don't even need fiat. It should be all fully decentralized. But I mean, the reality is that we still need fiat because that's how life works still. So to make fiat, crypto, transactions in a way that it is a lot easier, and also crypto adoption is getting better.
Yeah, absolutely. And thank you all so much for joining us today. That's everything. And thank you for coming on the panel. And
thank you
for hosting us.